Financial Secretary Paul Chan delivered the budget for financial year 2024-25 at the Legislative Council today. The second budget address of the current administration comes with a theme: advance with confidence, seize opportunities, strive for high-quality development. The peach-colored cover of the budget symbolizes the first glimmer of dawn, which inspires hope and longing for greater unity. This amid a fiscal deficit that has surged past $100 billion in the current fiscal year, with the fiscal reserves having fallen to $733 billion. Tightening expenditure, there will be no cash handouts or consumption vouchers, and no rent waivers for public housing. Rates and tax concessions will be scaled back. To boost government revenue, high-income earners and buyers of luxury homes will pay more taxes, and hotel accommodation taxes will be reintroduced. A second consecutive year of hikes for tobacco duty. And to buoy the housing markets, starting today, all property cooling measures have been removed and mortgage ratios relaxed. We begin our coverage with a breakdown of the budget's property-related proposals. The drop for 9 consecutive months in private residential prices has not only dented government income from both land sales and stamp duties, it has also led to calls from different sectors, urging the government to relax or drop the property cooling measures. With that, Financial Secretary Paul Chan announced in his budget address today that all such measures were scrapped with immediate effect.
This is turning the market back to the normal situation. How the market will react, of course, remains to be seen. But I think from the government's standpoint, it is important for us to grasp the right opportunity to remove the frictions in the market.
That means there are no more special stamp duty, buyer stamp duty, and new residential stamp duty for any residential property transactions. These so-called spicy measures were introduced between 2010 and 2016 to combat property speculation. The first sign of relaxation was seen in last year's budget when the 15% new residential stamp duty was halved to 7.5%.
I think it's good to help people to buy houses, especially good for the economy too.
Housing is always helpful to the extent that you can get more people in houses. They're buying furnishings and it fuels the whole economy. So you'd think it would be a good answer, but would it tend to help those in need, or is it going to help the wealthy?
In lockstep, the Hong Kong Monetary Authority announced a relaxation of various property-related banking requirements. The maximum loan-to-value ratios and mortgages for properties valued at $30 million or below will be raised to 70%, or 60% for properties valued $35 million or above, and for non-self-use residential properties. The interest rate stress testing requirement for mortgage lending will be suspended as well because the U.S. rate hike cycle may be approaching an end. As to whether that will lead to more negative equity cases, the Monetary Authority said the latest loan delinquency or default ratios are still lower than pre-pandemic figures.
Even with these adjustments announced today, the Hong Kong banking sector has ample buffers to cope with any challenges from a sharp correction in property prices.
The Monetary Authority also relaxed the financing caps for property development projects back to the pre-2017 levels, including the financing caps in proportion to the expected values of the completed property, the property site, and construction costs. The HKMA also added there could be more measures introduced according to the evolving conditions of the property market.